Let's talk about credit reports. Credit reports, right? What are they? Why do they matter? There's so many numbers, but I thought my credit report was this. The mortgage guy told me it was this. I don't understand. None of it makes any sense. Yeah. Okay, so first of all, let me talk about credit. Number one, first of all, I would assume that most of you know that we all have it, right? We start building credit typically around 18. Some people build it before that if their parents put them on credit cards or stuff like that. But as a general rule, you start building credit at 18, right? And it's basically figuring out how you're paying things, like what kind of money you borrowed and things like that, etc., right? Some people know, some people don't. Basically, there's three main repositories of credit. So there's Experian, Equifax, TransUnion. Those are the three main bureaus, right? And they each have a different scoring model, okay? It's very, very, very important to understand that they have a different scoring model. And I'm going to get back to scoring model in a second. So credit reports, right? Three main credit agencies. And the problem is that number one, when I say, what's your credit score? You have three of them. You don't just have one. Okay. Some people will only think they have one because like maybe they have a widget within their Wells Fargo card, Bank of America card, Chase card, or whatever that tells you every month approximately what your credit score is. They're only pulling from one. In fact, if you look at the details, it'll tell you which one. It'll tell you if it's Equifax, Experian, or TransUnion. It will tell you. Okay. Number one, you have three. Remind yourself, you've got three. Okay. Second thing is scoring model, right? So you're saying to yourself, have you ever gone to buy a car, gone to try to buy a house, and you think your credit is X? Maybe you checked it on one of those kind of sites like that. Maybe you checked it on Credit Sesame or Credit Karma, something of that sort, right? And you tell the professional, hey, my credit score is X, and they pull it and it's something else. And you're like, I don't understand. But this site, whatever it was, said that my credit score is this. Why is this saying this? Okay, so let me tell you. There's like 800 different scoring models within credit. There's a ton of them. And just so you know, mortgage is the most difficult qualifier. So we have the most difficult scoring model, meaning that as a general rule, our credit scores will come in lower than the ones you are likely seeing. Okay, so like if you go out there to the web and you're seeing that you're a 750 FICO score and all of a sudden we pull your credit and you're showing a 722 and you're like, I don't understand. Okay, it could be that the scoring model you're looking at and the scoring model I'm looking at is different. Also remind yourself that you could have only been looking at one score. We look at all three and we take the middle. Okay, so whatever that middle score is. And if you have multiple people on the loan, then we take the lowest of the two middles, right? So if one person has a 720 FICO score, one person has a 680 middle FICO score, right? These are two middle FICO scores. We're going with a 680 as a determining factor. Interestingly enough, I believe that there are some companies here recently that are starting to change that. But as a general rule, the industry standard for years and years and years has been the lowest of the middle scores. Right? So if there's 4 people on a loan, lowest middle score. That's what we're going by. So that's why sometimes we'll tell you as a mortgage professional, it may make sense to have one person on the loan or maybe exclude that person off the loan if it's really changing the mix. Okay? So if people are having those kind of conversations. But credit is so challenging because you come to me and you talk to me and we're having this conversation and we're saying, okay, hey, what's your credit look like? And you're telling me one thing and then you think somehow I went in the back and I changed your FICO score. Okay, just so we're clear, not happening. We don't get to make that up. In fact, we don't even get to know exactly what goes in the scoring model. It's proprietary. Equifax, Experian, TransUnion, they all look at things slightly differently, and we don't even know exactly what they are. We have a pretty good understanding of like how the relationships are, so that's why we can give some like general information. And I mean, I'm not a credit expert, I'm not a credit counselor, right? That's not any of my certifications. My license is in mortgage, but we deal with credit a lot, so I see it a lot. So can I give you some tips or some ideas of like, hey, you could do this or you could do that? Yeah, absolutely, I can. But I'm not going to be able to tell you specifically because I don't know exactly what the algorithm is, okay? What I do know is the higher credit score you have, the better off you are. And I also know sometimes like we have tools like a credit wizard that will help us tell you how you can improve your credit score. So like if you go and you pay down this bill, it might jump your credit score up by 10 points, 20 points, however many points, right? So Credit's really, really, really important. Just understand that when you're talking to a mortgage professional about credit score, understand that the credit score that you may have seen may not look exactly like the credit score they're going to tell you. Don't panic, don't freak out, don't be like, oh my gosh, the world's ending. No, that's not true. It's also why I highly, highly, highly encourage customers to talk to us sooner than later. Because guess what? A lot of those problems are fixable with time. So I can fix a lot of your issues. I can get a lot of that stuff worked out for you if you just let me talk to you first. But if you wait until, man, I found the house, this is it, I want to buy it, awesome, and now I pull your credit score and it's not as beautiful as we thought. So we still may be able to qualify you to buy a house, so don't get discouraged. The problem is it may not look as beautiful rate-wise, program-wise, etc. because your credit score is not an ideal situation. But if we had a conversation about it 3 months, 6 months, a year earlier, we may have been able to put you in a position where you're in a better spot, right? There's some things that could be done there. So just understand that that's kind of the situation with credit. It's confusing. And again, as I told you with everything in mortgage, the true story is it depends, okay? And so that's kind of the gist. And that's why it's so confusing and so complicated, because there's so many factors in play here. And why, again, it matters who you choose as a mortgage professional, because we're going to help you through this. Like, we're going to help you figure out the process. We're going to help make sure that you're exactly where you need to be. And we're going to educate you. Like, that's the passion there, right? That's a little bit about credit.